Hey, I'm Zeke,
And I'm Brian.
and you're watching Two Guys Talking Home Buying.
Hey everybody, welcome to today's episode of Two Guys. If you haven't watched us before, our goal with the show is super simple. We want to help as many people that are renting to become homeowners as possible, and we also want to help those people to take that first piece of real estate and really use it as an important part of their overall financial plan. So we cover everything about the home buying process from start to finish. And today, specifically, what we're going to cover is
The difference between a bank, a credit union, and a mortgage broker. Hey everyone, I'm Zeke. I'm the social media director here at Showcase Agency, and I'm also a first-time buyer. So I am looking to purchase my first piece of real estate this year. And I have a lot of questions, and I hope to get them answered here today with the super experienced Brian.
Yeah. So my name is Brian, and I'm the president and co-founder of Showcase Agency. We're a real estate and mortgage company, so that means we help people to buy and sell homes and to get home financing. And I founded the company with my wife Karen in 2017. Karen's been a licensed realtor since 2001, and she's been involved in a lot of transactions, including first-time buying transactions. And I've been a licensed loan officer since 2005. Now I'm a licensed realtor and mortgage broker, but I've had my mortgage license since 2005, and together we've got 30-something years of experience between us. And we thought it would be really good for you if you're a first-time buyer to hear some of the questions that Zeke is coming up with as a first-time buyer, because they might be some of the same questions on your mind, and then get them out in front of the camera for you. So today what we're going to talk about is the difference between a bank, a credit union, and a mortgage broker, because you've got options that you can choose from. So we'll talk about some of the differences. And if you'll hang until the end, we have a special offer for you where you can get a free copy of our beginner's guide to first-time home buying. So before we hop into your questions, it might make sense for me to just explain really quick, what is considered a bank where you would get a mortgage, what's, a little bit about a credit union, getting a mortgage there, and a little bit about a mortgage broker. And then we'll get into your questions. Does that work out?
Yeah.
Okay.
Awesome.
Cool. So basically, when it comes to a bank, there's two types of banks. There's what's called a depository bank and then a non-depository. So a depository bank is what most people think of when they think of a bank. It's going to be like Chase. It's going to be Bank of America. It's going to be California Bank and Trust. It's going to be U.S. Bank. These are banks where you can go in and not only can you get a mortgage, but you can also open up a checking account, savings account, get a car loan, those kind of things. So that's one type of bank. When I talk about them, I usually just talk about it as a bank, not necessarily a depository bank. The other type of bank is what is called a mortgage bank. And so they do not accept deposits. You're not going to open a checking account with them. You're not going to open a savings account with them. All they really do is just underwrite and fund mortgages. That's really all that they do. But they are considered a bank because they're lending their own money. So that's a bank. A credit union is like a bank, except you have to have a membership there. You have to be a member, and to be a member, there may be something specific, some kind of specific requirement. Like you might have to be a member of the military, or you might have to be an employee of the school system or something like that. So that's a credit union. And then a mortgage broker, what a mortgage broker is it's a person or a company that is approved to originate mortgage loans. So in other words, what they do is they're your contact person. Instead of you dealing directly with the lender, you're dealing with the mortgage broker, and the mortgage broker is dealing with the lender. The lender gives wholesale rates to the broker, so the broker is able to offer rates that are competitive to everyone else. instead of having to mark the rates up so that they can make a profit and stay in business and then be uncompetitive. So that's a little bit about banks, credit unions, and mortgage brokers. Gives us a little bit to hang some of these thoughts on. What's your first question, Zeke?
Yeah. So can a bank fund the money faster?
Great question. Can the bank fund the money faster? And the answer is probably no. And the reason, and actually in some cases the bank might actually be slower.
Okay.
So it really doesn't have a lot. It doesn't have anything to do with having access to the money, whether it's a broker, a bank, or a credit union. Having access to the money for the loan is not the issue. What the issue always is the loan approval process. And so if the process is smoother and has less steps and has less human touches, then it tends to go faster. If there's less people involved, sometimes if you have too many hands in the cookie jar, it slows the process down. So a bank, nobody really has any kind of advantage, a bank, a credit union, or a broker, nobody really has any advantage unless they have a solid, efficient process to get from application to closing. So, does that make sense?
Yeah, thanks for answering that.
Yeah. Okay, all right.
Perfect. That's perfect.
All right, cool.
Thank you for that. And then another question would be, do you need a high credit score to be considered for a mortgage bank?
Okay, so great question. Credit scores, so within different programs, there's a minimum credit score requirement, and that's considered an agency guideline. So there might be a particular Fannie Mae program that's also one of the conventional programs. So there might be a Fannie Mae program where there's a 620 minimum credit score, but whether you're working with, but the lender might have what's called an overlay. So the program might have a 620 credit score requirement, but that particular lender might have a requirement for it to be 680.
Okay.
So with banks, and I know you asked about a mortgage bank, not a deposit bank like we were just talking about, but with depository banks like Chase, Bank of America, big banks like that, a lot of times they will put an overlay on a credit score requirement because sometimes they only want the higher credit scores.
Gotcha.
So that credit score that you're talking about, you would probably find lower credit scores accepted if you were working with a mortgage bank or a mortgage broker, most likely. So if your score was lower, you'd probably have better luck with a broker or with a mortgage bank.
I didn't know that. Thanks for answering. That
Yeah.
would be the other way. But,
Yeah.
Okay. Which is easier to work with? So if you would go with your mortgage bank or your regular bank, which do you think would be easier to work with?
Well, it's going to be dependent a lot of times on the person that you're working with, which is usually the loan officer. And that's why we recommend that, and you will hear this in a lot of the content that we put out, we recommend that you get 3 quotes. So don't just get a home loan quote from one company and then just go with that company. Get a few other quotes. And so an easy way to do it is to get one from a bank, get one from a credit union, get one from a broker. Now once you do that and you start interacting with those different loan officers at those different companies, and you're talking with them and you're getting the feedback from them, and you're asking them about their process and how long it takes and different things like that. Once you do that much research and due diligence, you should have a good feeling of who is going to be the best fit for you, because it's not always about the lowest rate and fees. Sometimes it's about speed. Sometimes it's about accessibility. Like if a loan officer isn't available after 5 p.m., Monday through Friday, and they're not available on the weekends, and you need to speak with someone after hours or on the weekends, that's the only time you can do it, then accessibility might be really important to you, and some of the other factors may not. Another thing that some people find important is that they get a response quickly. And so if you're talking with 3 different loan officers and some of them are kind of slow to respond, if response time is important to you, then you kind of know who you're not going to get along with for the next 30, 60, 90 days. Because once you're in escrow, it's going to be 30 days that you're interacting with this person, this loan officer. How's it going to go? Well, in the beginning, when you're shopping around and you're trying to figure out who to go with, you want to make sure that you're choosing somebody that later on is going to be there for you.
That's
so
awesome.
I don't know if that really answers your question.
No,
You can't say for sure, like, okay, it's a bank or it's a credit union or it's a mortgage broker or it's a mortgage bank. Some of them are going to have different, even different locations. Like one Bank of America location may have a different, client service rating than this branch over here. So it's important to talk with people. Don't jump into it. Don't feel pressure to go with the first loan officer that you talk to, and don't feel pressure to choose a loan officer that's maybe put a lot of quotes together for you. Talk to a few different loan officers so that you can get some perspective. It's an important decision what you're doing, and it's an important purchase, so you want to make sure that you've got the right people on your team.
Awesome. So you just kind of have to find out, what's best for you.
So here's the thing is that you could work with someone that has not been in the industry, the mortgage industry, very long, but they've been really, really well trained, and they're part of a machine that is dedicated to closing on time. Because when you go into contract on a property, all of a sudden the clock is ticking. You have a lot of different deadlines that you have to meet. If you have your contingencies in place anyway, and we do recommend you keep them in place. But you've got all of these different things going on, and you really want to make sure that you're choosing somebody that's going to be there for you.
Awesome.
So,
Thank you.
What was that question again? I don't know if I covered the whole thing.
Yeah, it was which is easier to work with, banks?
Okay, yeah. Okay.
So awesome. And then I had this other question on here, but you kind of answered it, is who is better for mortgages? But then you have to go through those 3 quotes, right? That's what you recommend?
Yeah, I recommend, get 3 quotes, because you don't know, you really just don't know until you get the quotes and you compare them. And it's not even just about the quotes. It's not even just about the numbers. What you want is what you want to consider are these other factors, like, again, like I was saying, is that person going to be available after hours? Is that person providing you the kind of information that you want as a first-time home buyer going through this, somewhat complicated process? Are you getting the support that you expect from the loan officer? And that's really the best way to do it, is just to get some quotes and compare them. Awesome. Share the quotes among the loan officers. Some of them may not like that, but just share them and get their feedback on the other, on the competitors' quotes as well.
Awesome.
Yeah, it's a great learning experience. It's probably one of the best learning experiences that you can get to get up to speed on first-time home buying. And you really don't want to skip it. But if you only get one quote and then you just go with that one lender, then you don't get that benefit of having that perspective, comparing those things.
Great, that's great.
Yeah.
Awesome. Another question I have is, what is a direct lender?
Okay, great question. So a direct lender would be anyone that is lending their money, so it's money that they've got in their account, or they're lending money off of a credit line. So most lenders don't actually lend their own money. What they lend is money that's on a credit line. So it's kind of like having a big giant credit card, and let's say that you get a loan. Let's say you get a $500,000 loan. Well, that $500,000 comes off of that credit line, so it's like a $500,000 charge, and then that pays for your loan. And then what happens is the lender packages up all the paperwork that you signed, all the documents that they reviewed, and then they send that package out. It's called shipping. So they send that package out, and then that package gets reviewed by whatever agency is accepting the package, FHA, Fannie Mae, whatever. And then if that is acceptable, if that package is acceptable, then the money is paid back to the lender. That $500,000, they use it to pay their credit line, and so their credit line's constantly being pulled on and replenished and things like that.
Wow.
But that's what makes a direct lender. So you're talking about banks, you're talking about mortgage banks, you're talking about credit unions. Typically, sometimes credit unions will have a unique arrangement with an outside mortgage company to kind of like as a joint venture kind of thing, but it's not that often. And then there are some mortgage brokers that also, in addition to being a broker, they're also a lender. So they're kind of both. So you can that's what makes a direct lender. They're lending their own money, or they're lending money off of their own credit line.
Gotcha.
Yeah.
Gotcha. Thanks for that.
Awesome
I didn't
question.
know that. Thank
Yeah.
you. And then this is my last question is, which is better, direct lender or a mortgage broker?
Yeah, and you probably know my answer.
Yeah.
You're going to get the quotes. Yeah, you're going to get the quotes. And the reason I don't like to give a one-size-fits-all to anyone is because everybody is different, at some degree. Of course, people don't want to be taken advantage of. People want to get the best financing. People want to, be treated well. So you've got all of those things. But when you start talking about what's really important to a person, one person may, emphasize the interest rate and the fees. That might be the most important thing to them. They want the absolute lowest possible rate and payment and fees. It doesn't matter if they get treated poorly during the escrow process. It doesn't matter if people on the other end drop the ball and they figure, that's fine. I'm going to deal with it because I'm going to have this loan for 30 years. I want the lowest interest rate possible. So you've got people like that, and then you've got other people that would say, for a few $100s more, I'd rather go with this company because, they text with me, or they gave me the guy gave me his cell phone number. I can text him on the weekends with my questions when I'm off work or whatever. So, for somebody that's important, then a couple $100 may not make a difference. So that's why I feel it's, again, get 3 quotes, compare those quotes, and and ask a lot of questions. If the loan officer isn't willing to answer your questions, now in this early stage, then just think about how awful it's going to be, like later on. So, or how awful it could be, I should say. Who knows how it would really be, but it probably wouldn't go too well if they're not nice right now. So that's why it's important. It's an important decision. Be sure you shop around. You'll appreciate it and feel a lot better knowing that you put some effort into it. Kind of checking things out.
Some great advice. Great advice.
Cool.
And
you got more questions? I know this was like a weird subject.
I think I'm all out.
Well, I'm going to throw some stuff your way. I'm going to tell you some things, and then you can just let me know
Okay, perfect.
if you get any questions from it.
Thank
So
you.
let's go back to banks. So a lot of times banks, depository banks, so we're talking about banks that have checking accounts, credit card, checking accounts, savings accounts, and such. A lot of times those are great resources for jumbo loans. So if you're in the jumbo loan category, talking to a bank a depository bank is usually a good thing to do. The banks like Chase, et cetera, they tend to have the most restrictive overlays. So and we talked about the overlay for credit, right? So like the programs might have a 620 credit score requirement, but the bank is saying, you know what, we want a 640 or 680. So they can do that, or 700. So they can do that, but they can also do an overlay on the debt to income ratio. So if the program allows a 50% debt ratio, the bank might say, you know what, that's too high for us. We want a 45 or we want a 43. So those are the numbers we see a lot, 43% or 45% instead of the maximum 50%. Or if it's a FHA loan, the maximum is 57%. So a lot of times we'll see that restricted to like 45. So that's a bank. But you know, jumbo rates are good. If you already bank with that bank, you might feel more comfortable just, you know, doing everything with them. So there's, you know, some advantages to banks. Yeah, go ahead.
Yeah, what is a jumbo rate and jumbo loan?
So a jumbo loan would be anything that's over the high balance conforming limit. So there's two conforming limits. There's a conforming limit and then there's a high balance conforming limit. And so anything that's over the high balance conforming limit is going to be considered a jumbo loan. Now what that means is that means that loan is not a loan that falls into one of the common buckets of loan programs. It does not fall into Fannie, it does not fall into Freddie Mac, it does not fall into FHA, it does not fall into VA. It's its own thing. It's a jumbo loan. Sometimes they will have additional requirements because the lender may want to be a little extra cautious since it's such a big loan amount. You're talking about they just changed the loan limit, so I don't know it off the top of my head, but like right now it's like 960 or 980 here in Orange County. So you're talking about like, you know, upwards of 990,000, 980,000 and up for it to be a jumbo loan. So when that's going on, a lot of times the lender wants to be a little more cautious and they might ask for 2 appraisals, for an example. So jumbo loans can be a little bit different, but the banks sometimes will have, you know, great pricing. So if you're in the market for a jumbo loan, be sure you put a bank in your, you know, in the mix for the quotes that you're getting.
Awesome.
Yeah.
Thanks for that.
Sure. So that's a bank, depository bank, mortgage bank. We talked about them. Just a few things to point out with them. They can have overlays too. Everybody could be subject to overlays. So when I'm saying that the bank has an overlay for their debt to income or an overlay for their credit score, banks aren't the only ones. It could be a credit union, and then the mortgage broker, they actually go through the lenders. So that, you know, the broker might look at this program and say, oh wow, this lender has a 620 score requirement, and this lender over here has a 580 score requirement. My guy's got a 580 score, I'm going to take it over here. If that person was talking to a bank, and if this person was talking to any of these companies and they got denied, they may think that everybody's going to deny them. But the truth might be that it's just based on the overlays. And if they went somewhere else, they would get approved. So when it comes to a mortgage bank, or any of these guys, they could all potentially have these overlays. And that's why if you go to one place and they pre-approve you, but they don't pre-approve you to the highest amount that you want, it might make sense to talk to someone else, because that next person that you talk with, they might have a program that has a higher debt to income ratio allowed, and that would allow you to buy more home. Mortgage banks, one of the cool things with mortgage banks is that this is all that they do. They're not doing deposits and credit cards and car loans and stuff like that. So that's their only focus. That's their only money maker. So a lot of times they're really focused on how can we make this process more streamlined. Sometimes that happens and sometimes it doesn't. It can still get kind of frustrating no matter who you're working with if the lender has somehow dropped the ball somehow and got you behind on your timelines.
Gotcha.
But that's a mortgage bank. It's also called a retail lender sometimes. I know you mentioned a direct lender, but a mortgage bank would sometimes be called a retail lender.
Okay.
And a credit union, we kind of talked about that before. You have to be a member, of the credit union to take advantage of their stuff. Credit unions a lot of times will have, credit unions usually fall into like two buckets. Either they're really into doing mortgages or they're not. If they're really into doing mortgages, you might find that they're very competitive on pricing. They might have some incentives that they're giving you. Maybe they're giving you like a free appraisal or something like that. They'll do a lot of stuff like that. And they tend to have a great process. But that's one type of credit union. Another type of credit union where they don't really care for mortgages, it could be a bumpy road just because they're not that enthusiastic about it, and also too they may not keep up on the guidelines and changes and stuff like that. So that's a credit union. And then the last one is a mortgage broker. And a few things about a broker: basically they have relationships with multiple lenders, or as many lenders as they want to have relationships with, and there's hundreds, thousands of wholesale lenders out there. So what a wholesale lender is it's a lender that does not reach out to the public directly to get business. It depends on the mortgage broker to bring the business to them. So the mortgage broker gets the business, takes the loan application. A lot of times we'll do the initial pre-approval, such as running it through the automated underwriting system. So there's all these things that the broker does. And then when it comes time to actually get the loan approval, then the loan is all this work that the broker has done. The broker submits that to the lender. The lender then goes through the process of approving or denying or suspending the loan. And then all the communication, a lot of the communication to you is through the broker, or the broker is included on the communication. And then at the end, the lender is funding the loan, but the broker is still involved. So the broker is involved from the beginning to the end. The advantage with a broker or a few advantages would be, like, if your loan got denied at one lender for some reason, and a different lender would not deny your loan for that reason, then the broker can take the denied loan and then just take it over to the other lender and get it approved. So I made it sound really simple. It doesn't always work that simple, but that's one thing that a broker can do. Whereas if you get denied at the bank or the credit union or a direct lender like a mortgage bank, then it's a dead end. You get denied, you're denied. So that's one thing that's cool about a broker. And then another thing is just that they can look at a lot of different lenders and find someone that has the best fit for you, whether that be maybe you're looking for a large lender credit to cover your closing cost, or maybe you're looking for something special because your credit score is low, or maybe you're looking for something where a certain type of documentation isn't needed because you can't provide it. So there's all these different options that the mortgage broker has at their fingertips.
Awesome.
So that's a little bit about those, to give you a little bit more insight.
Awesome. And what's Showcase Agency considered?
So we're a mortgage broker. So that means that, just like I was saying, we've got relationships with multiple lenders. We have a system that allows us to check lender rates for hundreds of lenders, and then we're able to work with the lenders that we're set up and approved with. So that's how it works. Just like every other broker. But again, what makes the difference? What makes you happy as the home buyer and the client a lot of times is that the relationship that you have with the loan officer, or maybe the process that they take you through, where it's smoother than someone else's process. So so I'm not saying that a broker's the best way to go just because we're a broker. Sometimes it is, sometimes it isn't. But definitely get those quotes and make some comparisons. And you may end up going with the first person you talk to, but at least at that point you know that you've done your homework and you know that you're going with the best person, not just with the first person that you talk to.
Awesome. That's awesome.
Yeah.
Great advice.
Yeah, very cool. Anything else?
I think that's pretty much it.
I got one more thing to say. So within all of this, when you're looking for someone to get a quote from, Something you might want to consider is working with a loan officer that's been certified through the CMPS Institute, that's Certified Mortgage Planning Specialist. And so somebody that's been through that training has additional financial training so that they can help someone pick the best mortgage based on some of their future plans. Like you might have kids that you're going to put through college at some point, and you need to save for that, or you might be planning on taking the property that you're buying and in a couple of years convert it over into a rental property and things like that. So when you're making that home purchase, sometimes that home purchase, sometimes you can use that home purchase to make it easier for you to put that kid through college, or to make it so that you pay less taxes or whatever. So sometimes it can be good to talk with someone that has a little bit more knowledge. And you can find a CMPS certified loan officer at cmpsinstitute.org. And then also I'm certified through CMPS. So I know firsthand, what kind of program it is. And any of the loan officers that are approved in that program, some of them are credit unions, some of them work at a bank, a mortgage bank, and like myself, I'm a broker. So it could be anybody, but that's a great tool if you're trying to find some people for a quote. And if you'd like a quote from us, you can always just text quote to 949-518-0742. And we'll take it from there and get you a quote, and there's no obligation or anything like that.
That's awesome.
Cool.
That's awesome.
Cool.
And then to kind of wrap it up, we do have a viewer question, so
let's hear it. What's your viewer question, Zeke?
Get it out. All right. Can I get a personal loan after I purchase a house for like appliances, just personal items,
Yeah, it's a great question. A lot of especially first-time home buyers, they see their savings account go from here down to here because of the down payment and everything involved. And so a lot of times a buyer, when they move in, they're not that excited about putting more cash into furniture or appliances or whatever. So, yeah, once you get a home loan and it starts reporting on your credit report, it takes a month or two. But once it starts reporting on your credit report, it's typically a nice boost to your credit. Having a mortgage and keeping that mortgage in good standing is considered to be like one of the best things that you can do for your credit.
Wow.
Because it's such a big, now you're talking about you're going from having maybe a $10,000 credit card limit, and maybe you've got a $50,000 automobile. Well, now you got a $500,000 home loan. It's
your credit, increases.
Yeah,
right?
your credit score increases.
Okay.
Yeah, your credit score.
Now.
I'm sorry. Your credit score increases. Yeah. So if you buy a house, your credit score, your credit was good enough to buy the house. It's probably just going to keep getting better, and that's going to be pretty much the main thing that anyone is going to look at that's lending you money for a personal loan. So. I know that person mentioned appliances. There's a lot of times options where you can find like 0% for 18 months on appliances and stuff like that. So that's another option for someone that they're looking to build up their reserves, their cash reserves, because they just depleted them. So that's a good way to go. Some of the furniture stores will do that. Probably the one thing that I should mention right now is when you do buy a house, watch out after you close, because when you close on the house, a lot of your information, your name, the address, the lender, the purchase price, a lot of things become public information. And because that's what's on that, we talk about recording sometimes, right? Mm-hmm. So some of the documents that are, once the document is recorded with the county, that's a public document. It's not a private document. And so now all of a sudden your name is on a bunch of marketing and solicitation lists, telemarketing lists. If you're on the do not call list, you'll probably not get the calls, but you may get, but then you get bombarded with all of the mail. So I just say that because this person's talking about they've depleted their cash, they need to buy some things, and is there, can they get a personal loan? Yeah, you can get a personal loan. Be careful of the terms. Don't get taken advantage by the terms. Watch out for predatory people, because there's a lot of predatory people right after you close on your house. And but yeah, you could get a personal loan. You may also too want to consider, like if you're having to get a loan for some things, maybe you would want to keep more cash in your pocket instead of putting so much out. So you might want to talk with your loan officer and see if you can make an adjustment to your interest rate so that you're bringing in less cash. So so there's some different things there. But yeah, that person wouldn't have any problem being able to go out and apply for a loan and probably get the loan.
Gotcha.
Yeah.
Gotcha. Thanks for that. Some great knowledge about getting bombarded post house purchase. I didn't know that.
You'll get a ton of stuff, by the way. You'll get all kinds of stuff, and some of it is really scammy. You'll get what's really common is to get a notice in the mail, and it looks like it's from the county recorder's office, but it's not. And what they're selling you is a copy of your deed, and they're trying to convince you that you got to have a copy. They're trying to convince you that your ownership of the home that you just bought may be called into question if you don't have a copy of that deed. So they really build it up so that you're scared, and then to get a copy of the deed is like $50 or whatever. So you send in the $50 and they send you a copy. But number one, you don't need a copy. Number two, if you want a copy, the escrow company gives you a copy. So so there's all these scams that come out. And then there's stuff that isn't scams. Home Depot is going to send you a credit card offer. Lowe's is going to send you a credit card offer. Best Buy is going to send you a credit card offer. All these guys are going to come out of nowhere because they know that you bought a house. So those aren't scams, but just be aware of that. One of the mistakes that some first-time buyers make is as soon as they close, they run up a bunch of credit cards, and maybe something happens to the home that's not covered by insurance or the home warranty, and now they're out of pocket even more money. So you just want to be careful what you do when once you purchase, to make sure that you're not overextending yourself.
Awesome.
Yeah.
Awesome. Thank you for that.
Yeah, absolutely. Is that it?
Yeah, I think that pretty much wraps it up.
I got one more thing for you. If you'd like a copy of our new Beginner's Guide to First-Time Home Buying, you can pick up a copy. You can download it for free at showcasefreeguide.com. And, we appreciate you being here. We appreciate you watching this. And
if you guys have any questions that you guys want answered in one of our episodes, just comment them down below. And also, please subscribe, turn on your post notifications to be alerted when we upload next, and hit the like button.
Sounds great. Take care.
I'll see you.